Hello, welcome to this segment of the accounting and tax tutorials. I'm your host, my name's Philip. Now today I'll show you how we reconcile the GST of a particular entity, how we do a GST reconciliation and make sure that the client's or the entity's GST position reconciles with what was lodged to the tax office. Now I'm going to share a screen with you. Because it is very important to grasp the fact that the GST position needs to be reflective of the ATO portal and what was lodged. And it's a vital aspect of reconciling a entity's accounts. So to start with, an entity can report GST to the tax office in one of two ways. The first way is a cash basis, where this simply takes into account all transactions that come in and go out of the company's bank accounts. It does not take into account any invoices or bills that are unpaid. That's one way. However, there's a little bit of a shortfall on this, and the shortfall is a set of accounts is prepared on an accruals basis. So there are debtors and there are creditors. Now, if you report GST on a cash basis, but at the same time you record debtors and you record creditors, you're going to have a little issue with your balance sheet and your profit and loss, especially when it comes to reconciling the sales and reconciling the GST position. The other way of reporting the GST is on an accruals basis. Now, the accruals basis takes into account invoices issued and bills issued. They don't necessarily have to be paid. So let's say you invoiced your customer on the 30th of September for $10,000 and it got paid 2 weeks later. That $10,000 still needs to belong in the September quarter BAS because you're reporting GST on an accruals basis. And therefore, the GST component on that $10,000 has to be declared to the tax office in that quarter. And that ties in with your profit and loss statement and balance sheet because they are prepared on an accruals basis. So they're basically the two ways of reporting the GST. Now, let's have a look at this template. This is a simple reconciliation template where you reconcile the GST and the wages and the PAYG withholding. So let's put in a company, ABC Logistics, Pty Ltd, 2020 financial year, GST reconciliation. And let's say the company uses cash basis for its GST and it doesn't keep any debtors or creditors. So we change the dates there, September 19, December 19, March 20, and June 20. And then let's say the balance at 30th of June 2019 was 4,500, and it was the same as per the ATO portal, 4,500. Now, we'll get to this ATO portal later on, but let's just put in some figures. I am just formalizing these things here. Sorry, so this column here, the G11 non-capital purchases, these days, if you're lodging the BAS directly on your business portal or through the tax agent, you don't have to have that figure. You can just simply you simply put in the 1P figure, and that's a part of the simpler method of GST reporting. I'm just putting in some figures here. And these are, fictitious figures. They're just coming from their client's quarterly GST report or GST cash report. And okay, so the W1. Again, I'm just putting in some rough figures there, just so that you can see for yourself. Now, there may be instances where in this column, there's a PAYG tax installment. So what happens there is the tax office, when you pay income tax, the tax office just generally works out a rate of a tax installment, and you'll usually see this on the BAS. Now, this tax installment, think of it as a tax prepayment for each quarter. So let's just put in some figures. And these are part of the BAS, so they would need to be paid with the quarterly BASs. Now, in this section, this is where you've made payments for previous BASs and where, if you've lodged late or paid late, you may have incurred a general interest charge. So these are all taken into account. So let's say these payments were made, 4,500 was made in relation to the June quarter. And so you see this cumulative balance. When I've put in that 4,500, you see the total GST position. This covers a whole financial year. This goes now to be the same because we've made that payment in relation to the previous financial year. Let's just put in those payments. 746. And therefore, something has happened. Minus 3746. Okay, that's better. So if it's a payment, you do a negative figure. Now, if you get refunds, the refunds will need to be a positive figure. So you've got the total GST position here as per your file, which includes the net GST 1A minus 1B, GST on sales minus GST on purchases, your PAYG withholding, and your PAYG tax installments. Now, if these have been taken up correctly, you'll see that the total figure represents a position at 30th of June, which shows your GST report at 30th of June. Now, let's say, for instance, you've had some, general interest charges due to late lodgements and so on. So $123 in interest. What you do here is you also put that on the ATO portal because that's what you got from the ATO portal. Let's make that payment for 500. So you have this. So this is basically now your summary of each quarter, the GST and the PAYG withholding. Now, before moving on to the tax portal, what you need to do is there's vital components that you need to reconcile. Sales, net sales. So let's do total sales minus GST on sales. 140,909 should be in your profit and loss statement as your total income. And that would include if there's any GST free sales. But let's just say, you're a simple restaurant or you're a simple retailing business. You don't keep debtors and you don't keep creditors, and you've lodged these as part of your sales, 140,909. Now, in some instances, the profit and loss income may not be the same In fact, it may be different by a few $100s, maybe by $1,000. Now, the only suggestion that I can offer, or the only maybe reason perhaps that can be explained, is depending on your accounting software. If you have paid for certain expenses and then you've been refunded, or if you've had purchase refunds, uh, some softwares record purchase refunds for GST purposes as a sale. And that's unfortunate because then you need to go to the GST detail report and pick out which expenses have been refunded and take them out of the sales and put them as, negative expenses or negative purchases, and then fix up all of this, which will then tie it back into the profit and loss. So ideally, we want to see something close to 140909 as a total income in the profit and loss statement. Now, the wages, that's another integral part of reconciliation. You need to look at a few sections in terms of your wages. Firstly, payroll activity summary, because this is where you get these wages and PAYG tax from. So if the payroll activity summary shows those as the totals for the year, then you're on the right track. Now, we know these days that all businesses now have to report wages via single touch payroll. Businesses with employees, they need to report via single touch. Now, just because you report via single touch payroll does not mean you can ignore reporting wages and PAYG tax in your BAS. No, you have to still report these in your BAS. And so when you look at the single touch payroll reports, all payrolls that have been filed and sent to the ATO need to be the same as what's in your part of your total wages and your PAYG tax. If they reconcile, then you're on the right track. And ideally, these are the totals at the end of the financial year that will go to the tax office and that will be finalized. And your employers will be able to see all of these relating to them, and you'll also be able to see the single touch payroll reporting. Now, total wages, 52,750, needs to obviously tie back to the profit and loss statement as salaries and wages or employment wages, whatever account you want to name it. If that shows 52,750, then you're on the right track. Okay. Now we transfer these amounts in the to the ATO. So we are assuming that every quarter you're making the right, you're using the right reports and you're lodging the right figures. Because if you're not using the right figures and you're lodging some different figures, then you may need to do some reconciling and amending activity statements at the end. Now, in terms of amending activity statements right at the end, I would advise that you speak to your employer or to your supervisor and show them the reconciliation template and let them know why it's why the ATO report lodgements are different than the client's reports, and if there's grounds, if they're reasonable grounds for amending, then we amend. Okay, so let's say that you've done the right thing. It's a straightforward client. The ATO portal lodgements all tie in with the client's file. Now, before you also look at the ATO portal lodgements, it is recommended that you get a printout or a PDF of the running balance of the client's or the entity's activity statement account. That will show a summary of the GST and the PAYG withholding and the PAYG installments. So assuming that all of these are correct and the small general interest charges are taken up, there are no corrections that need to be made. Now, assuming that June BAS has not been lodged yet, and you have these figures up at the top as part of your client's data entry, you will see the data file corrections all here. And that represents what needs to be lodged to the tax office in the June quarter BAS. So let's put in these figures again and see what happens down below here. So you notice how these are all now disappearing because we are lodging the June quarter BAS on these figures there. Okay, so ideally now in the ATO running balance account, you should see all this up to the end of March. So all of this, you should see it netted off, assuming that your client is really good with making payments to the tax office and so on. We should be able to see this as your ATO, as part of your ATO portal, your GST and PAYG position. Now, the PAYG income tax installment, it's not a GST payable. Think of it as like it's a sundry creditor to the ATO, which is still reflective on the business activity statement, and it does need to be taken into account. So this represents a total prepaid tax that were raised in the BAS, because then at the end of the financial year, you need to work out the total tax liability, or at least the tax expense part of the profit. If you do have, let's say your total tax expense after taking 27.5% of your taxable income, let's say it's $11,000. But in the BAS, we've had $12,000. That means the company will get $1,000 refund after it lodges its income tax return. So this is basically how you do a reconciliation of the company's GST position. And it's not only the GST liability, it's total sales, net sales. Need to ensure that it's close to what you see in the profit and loss statement. Total wages and total PAYG tax. Again, we need to ensure that it reconciles to payroll activity summary, profit and loss statement with the total wages. Now, with the total PAYG tax, you can also look at the PAYG withholding tax ledger for the whole financial year. And if the total is what it is here, 10,931, then you're on the right track. And then you look at the SDP reporting to see that these have in fact been the same amounts that have been lodged. And then you look at the ATO portal and see that in fact, if these have been lodged, the wages and tax withheld, if it's the same as your payroll activity summary and what was lodged via SDP, and if it's the same as this client's data file summary, then you've done the right thing and you've reconciled all of these components. So please make sure that these totals do reconcile and these total wages reconcile. So that's basically how you prepare a simple GST reconciliation worksheet. And I will try and make this available somehow as a link, or if I am unable to make it available as a link, I'm happy to email you a blank spreadsheet of that. So I trust that this has been helpful and that you can now see how important it is to reconcile GST and see how this GST is reconciled. And now it's up to you to go and do those exercises for all of your clients.